Hello traders, in my last trade recap, we went over my trading statistics and I showed you how even despite 4 losing trades in a row, we're still showing profitability, especially if we skip our first trade or we hold till 3R, which is something that we've talked about a lot. This is if we skip our first trade, but use the exact same trade criteria and entries and all that kind of stuff. I have this zoomed out for a reason. What we're going to do now is look at, is this thing still profitable in a market downturn? And we don't have as much data, but we still have quite a lot because the S&P 500 flipped over about the beginning of the year, right? You can see when I hover over this candle, it shows you the date. So that was the beginning of 2022. Now, most of my trades, out of the 76 trades I've taken, they're before that downturn. So is this plan still profitable if we, are trading it in a downturn, or is it extremely risky or whatever? So we're going to go over the statistics we have so far. So obviously I took a big break between November and the new year. If you watch my other videos, you might know I had to study for board exams, so I just stopped trading altogether. But I came back on February 4th and we started trading then. That was well into, let's see, where's February? Is right around here. So lots of choppiness, and still we're well into that kind of rollover of the market. So what's our statistics since then? Well, if we're trading till 2R, I think we're about break even, but if we're holding till 3R, we're up a bit. I think it's 6R. I counted it kind of quickly. I wanted to do it with you live just so you don't see there's no smoke and mirrors here, right? So here's my statistics. Let's count how many losing trades we have. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and then there's a 12th one over here. So that means that we are minus 12R. That's without the winners. Okay, and then if we count the winners, 1, 2, 3, 4, 5, 6. That's it. So 6. So if we're holding till 2R, 6 times 2 is 12. So that's plus 12R. So for 2R, we're break even, right? So we're at 0. But again, we still have the same amount of losers if we held it till 3R plus 2R, because all of those stocks went to 3R that went to 2R, or all of those trades, I should say. So let's just go back here. You can see that every single one of them that went to 2R also went to 3R, which is interesting in and of itself. So now, since we still have 6 winners, 6 times 3 is 18. So that's plus 18R. That looks like a 6, but it's an 8. So what's that? 6R. So we're up 6R even in this kind of crazy market. Again, having to hold till 3R, which is something that I repeat over and over again. That's what we're going to do when we're all done with this test. The reason why I don't do that yet is just because I want to be consistent with the test, and the test was to design to hold till 2R, but we've been tracking 3R this whole time. So I need to put in the data here. We have 0R there, and we'd be up 6R. So that's even in this rollover type of market. So let me zoom in here a little bit more so you can see. This is what we're focused on. How many trades taken since the S&P 500? We didn't count that. So we said we had 12 losses and 6 wins, so 18 trades. And our 2R value is 0. We're break even if we hold a 2R, but we're up 6R, 6 times our risk if we are holding a 3R. And that's all going to be relative to your risk. If your risk, not the 6R value, but if your risk is $10, you'd be up $60. If your risk is $100, you'd be up $600, so on and so forth. So you get the idea. Based on my data, this plan is still profitable even in this kind of crazy downturn. And that's something I find really interesting because this plan is long biased. It looks for long opportunities. And remember that long just means that you're placing a trade with the expectancy that the price is going to go up and you sell for a profit. It doesn't mean you're in the trade for a long time. Our trades usually last a few minutes. So that's it. Hopefully you found this video helpful to you. The main message here is you've got to go into every trade with a plan, and you've got to track the results of the trades that you've taken within that plan. That's how I can come up with all this cool information and not just guess or assume that, hey, you know what, I just came off of a 4-trade losing streak. Is that because I'm trading in this market downturn? that would be a good guess, but my data shows me otherwise. We're still profitable if we hold till 3R, up 6 times our risk. We're break even if we only hold to 2R, so we're still not losing money. So very interesting. And also, right before I wanted to make this video, someone had a comment on my video, very great comment about my results being inconclusive because I'm not trading with the same share size or relative share size and relative risk on each stock. I'm just trading with one single share. That's all by design. That's because right now we're just trying to collect data. Can these trades go to 2R? Can they go to 3R? And then once the test is done, we're going to proportionalize our share size. So let me see if I can come up with a quick example. If one stock has a risk of $10, let's say we're going to trade 10 shares and then we're risking $100, and then the next stock has a risk of $1, we're going to trade 100 shares and the risk is the exact same. So instead of just trading a constant share amount, like here we are trading one share, that's just because we don't want to waste any money, and that's why I have this as cost of the test, not the P&L. This doesn't really show you the P&L. It only shows you the cost because we're trading one single share on every single trade. So hopefully that makes sense to you. I know it's kind of confusing, but if you don't fully understand it, ask a question in the comment section below. The reason why I do the one single share is really just to protect my account value and to show you that you can collect a lot of data and still protect your account value. We've taken 76 trades so far. It's only cost us $4.70. If you just go out there and do something random 76 times in the stock market, I guarantee that you're going to lose a lot more than $4.70. So this is the cost of collecting the data for this test. Very reasonable cost if you ask me. So again, if you have any questions, let me know in the comment section below. If you want more information, if you want to know what my plan is that I'm talking about, it's all available on patreon.com/tradingarmor, but absolutely no pressure. The main message I like to get across in all my videos is that you have to have a trading plan and you need to develop the discipline to stick to that plan in every trade and then track the results. Otherwise, everything you do is absolutely random and meaningless, and you're going to have random results, and more than likely they're going to be red. You're going to be unprofitable in the long run. I speak from my own experience as when I started out trading. So anyway, that's it. As always, go in every single trade with a plan. Stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.